With an EIS investment, there are up to 5 tax reliefs which an investor might be able to claim. I think the easiest way for me to explain these is by looking at a couple of slides. The first slide is an example of an investor who subscribes £50,000 into an EIS fund, and the money is used to purchase 5 investments costing £10,000 each. I'm leaving out costs for simplicity. The investments are realised 5 years later for £100,000. In the first column, we see the investment made in 2012 and the shares being sold about 5 years later for £100,000 with no tax relief at all. So there's no tax relief up front, and on sale, capital gains tax is paid at a rate of 28%. And as you can see, the return on investment is £36,000, a rate of return of 12%. The second column is the same example, but with EIS relief. The investor is able to claim £15,000 of income tax relief back at a rate of 30%. The investment is then sold 5 years later, as before, but in this case, EIS exemption means there's no capital gains tax. So in this case, the net return is £65,000, a rate of return of 22%. So in that very simple example, clearly demonstrates the value of EIS relief. Moving on to the second slide to show the other reliefs which may be available. The same facts as before, and the first column replicates the second column on the previous slide. Moving on then to the question of EIS capital gains tax deferral. If an investor has made a capital gain on selling other assets in the 3 years before the EIS investment, or indeed in the 12 months afterwards, the gain can be deferred through the EIS investment. We see this in the example. The investor puts in £50,000, and I'm assuming they've made a gain of £50,000 on selling, let's say, a share portfolio, a property or whatever. They can apply to the revenue to have the £14,000 tax that they paid on that gain repaid to them. Then moving forward, they sell their EIS investment 5 years later, at which point the original capital gain comes back into charge, and they'll have to pay that £14,000 tax. But of course, they've had the benefit of having the money in their pocket for 5 or 6 years. And if they wish, they can take an opportunity to re-defer the gain at that point by a further EIS investment. The next column shows what happens if one of the EIS investments in this portfolio completely fails. And I'm assuming that in about 3 years, one of the investments, which cost £10,000, fails completely. The investor gets nothing back at all. So bearing in mind that investment cost £10,000, there was £3,000 tax relief, so a net investment cost of £7,000. That £7,000 is lost. A higher rate, 50% taxpayer, can claim income tax relief, which gives him £3,500 back. So bearing in mind £3,000 tax relief up front, £3,500 on making the loss, that's actually £6,500, 65% tax relief on a failed investment, which is one of the big attractions of the EIS. It does provide risk against losing the investment. The final column shows the inheritance tax benefits of EIS. Now, inheritance tax is a quite separate tax, so it's not technically an EIS relief at all, but almost invariably, a share that qualifies for EIS relief will also qualify for inheritance tax business property relief. What this means is that if an investor has held a share for at least 2 years and then dies, the investment is free of inheritance tax. So looking at the example, as before, we have the investment, we have the income tax relief claimed. Then sadly, just before the sale of the shares, the investor dies. Those shares at that point were worth £100,000. Had the investor actually had £100,000 of cash, his estate would have suffered inheritance tax of £40,000. Because the estate actually owned these shares, qualifying for inheritance tax relief, there's a £40,000 saving. So you see effectively a net return there of £105,000. I can't recommend death as a form of tax planning, but having said that, it does show what an effective investment this can be. Over the last year or so, the government has demonstrated its commitment to the Enterprise Investment Scheme. Looking back to April 2011, the income tax relief on EIS investments was increased from 20% to 30%. Now here we are in early 2012, and next April, April 2012, there are further planned changes. Firstly, to the size of companies that can raise EIS investment. At present, the limit is up to 50 employees. That will increase to 250 employees, and those companies can raise up to £10 million a year, an increase from the present £2 million. So at the top end, larger companies can raise more EIS money from April 2012. At the bottom end, the government has introduced an exciting new seed EIS scheme, a sort of son of EIS. That also will come in from April 2012. We have draft legislation for that, which suggests there may be as much as 78% tax relief for an investment in an early stage company. And investors can subscribe up to £100,000 a year in seed EIS companies.